Thank you for joining us. My name is Michael Lewellen. I am the Director of Financial Planning at OJM Group, and today we're going to take a look at disability insurance and how it can protect your dreams and priorities. Any good webinar presentation is going to have some disclaimers on there, so I will give you the opportunity to take a look at those. Today we're going to be focusing on one small piece of your overall financial plan, which is disability insurance. But if you were to ever suffer a disability, it would probably be the most important piece. So as we talk about it today, that's what we'll be focusing on. Let's take a look at some of the material that we have to offer here at OJM, and some of you may be familiar with it. Our For Doctors Only book is the national version, and obviously it focuses on multiple disciplines where we're looking at tax planning, asset protection, corporate structure discussion, just a basic financial planning, insurance, and obviously investment. The goal being taking a broad look at your overall situation and making decisions in each discipline in a coordinated fashion. That's the goal. And we also have, you can see, state-specific books for the state of New York, Georgia, California, and Ohio. Obviously, some of you may be non-physicians, so the book that would be applicable for you would be Wealth Secrets of the Affluent. There'll be an opportunity for you to request a copy of any of those books at the end of the presentation. Let's take a look at today's agenda. First and foremost, we're just going to hit on disability insurance and the basics. Want to make sure everyone has a good understanding. A lot of times clients come to us and they say, I have disability insurance and I got it just because someone told me that I needed it. They don't really understand it. So the goal here, a big part of what we do at OJM is making sure our clients are educated, so we want to take some time to do that. Then we'll dive into different types of products and benefits, and then really focus on coverage that is applicable for the physician or business owner, the physician owner or business owner. Just to get an idea, obviously you can see here what we're going to be taking a look at today is individual disability insurance. We talked about that a little bit, but just to kind of give a visual of that multidisciplinary plan approach that we talked about. You can see at OJM we specialize in multiple areas with a team of professionals where we're able to look at your situation from an asset protection, tax, corporate structure, benefit planning, retirement planning, insurance, and wealth management. You can see insurance is just one piece of that overall multidisciplinary approach, and within that, what we're going to be talking about today, individual disability insurance is just one piece within your overall insurance planning. So let's take a look at the basics. Just get started. Now you may have seen this illustration before. It's been used quite a bit in regards to the disability insurance discussion, but obviously we're looking at a pyramid here, and the concept is the foundation of any planning, first and foremost, is income. Your ability to reach your goals, as you can see kind of as you move up the pyramid, retirement, personal savings, personal investments, business ownership, whatever that may be, is all facilitated through your ability to produce an income. Now you take measures to produce or to protect that, automotive, home insurance, life insurance, health insurance, property and casualty insurance. But the ability to support all of that is your ability to produce an income. And obviously at the top of that pyramid there is passing on personal or business assets, or leaving an inheritance for your heirs. But your ability to work your way up the pyramid is determined by your income. So if something were to happen to you and you were unable to produce an income, obviously you'd be unable to build the pyramid, or if you started building the pyramid would fall. So let's take a look at really the cornerstone of disability insurance, and this is a topic or part of it that a lot of people hear because carriers can really differentiate themselves here. But the definition of disability, which is probably, as we say, the cornerstone, the most important piece of any disability insurance contract. So let's take a look at that, because you can really have different levels of protection there. Pure own occupation, as you can see there, what we're talking about is if you're unable to perform the material and substantial duties of your occupation. So whatever that may be. It can be different for everyone. Obviously, if you're specialized as a surgeon, your ability to be a surgeon is your ability to perform your material and substantial duties there. So what this means is if you were to suffer a disability and you couldn't do your job, you could perform your duties, then you're going to receive 100% of your benefit. Even if you go back and retrain and, using the surgeon example, if you go back and retrain and go to school to become a CPA or to become an attorney, if you do a whole new field and you go and you're making just as much money as you were making before, your disability contract's still going to pay you 100% of your benefit. So that's an important thing to take into consideration. That's the maximum level of protection that you can receive. The modified ONOC, there really can be a lot of different versions of this. Some carriers like to throw in the medical definition of disability to kind of make it sound real specific for physicians. Some are called your own occupation, transitional occupation. While some of these may be adequate for the right person, that doesn't make them wrong. They're less protective than pure own occupation. So in some way, in some form or fashion, if this definition of disability can't force you to go back to work, and that's important, neither can the own occupation. You can't be forced to go back to work into another field for what you're not trained for. But while this one can't force you to go back to work, if you do go back to work, they're going to offset some of your benefit. So the typical one, modified ONOC, if you're, just as an example, let's say you go back to work and you're producing 50% of what you were making before, then you're going to receive 50% of your benefit. There can be some differences inside of there, but really what you're looking at is if you're going to go back to work, there's going to be some offset of your benefit. Any occupation is really the lowest level of protection. What that means is you have to be completely and fully disabled. So if we use our example of our surgeon and say that, well, they may have whatever with their hand, jammed their hand in a car door, broken their arm, whatever it may be, and they can't do surgery, but they can do something else. And that's based upon your education, and at that point, the educational level of a surgeon obviously is very high. So that's probably the lowest level of protection. This falls into very few individual contracts have this. You see this sometimes with association policies. So if you have an association disability insurance contract, that's something that you want to take a look at. That's really important there in that regard. Or with group insurance, a lot of times we see that. Things to look out for. Pre-tax, post-tax, that's a discussion we have with clients a lot, is can I deduct my disability insurance? You can do that, but you really don't want to, because if you were to ever suffer a disability, then all of your benefit would be taxable to you. So you can either deduct the premiums, or you have to deduct the benefit if you were to receive it. Now, obviously, some clients say it's a gamble. I don't think I'm ever going to be disabled, but the reality of it is you have the coverage, so you're acknowledging that there's a chance of it. From a financial standpoint, you're definitely better off paying with post-tax dollars for individual coverage. And we'll talk a little bit in a few minutes about pre-tax. Sometimes with group coverage, you don't really have that option. Non-cancelable and guaranteed renewable, those are two terms that are really important. Non-cancelable means that nothing can change on the contract. They can't come in and raise premiums. They can't come in and raise costs. They can't come and change anything to your contract. Guaranteed renewable, if it's just guaranteed renewable, that just means that they have to guarantee that it's renewed every year, that they can come in and increase costs. So what you really want to see is a non-cancelable, guaranteed renewable contract. So they can't change anything, and it's guaranteed to renew every year as long as you pay your premiums. Occupation class. This is important because it can vary by carrier. Carriers don't look at every occupation the exact same, so some can be more favorable than others. There's carriers out there that really like physicians or really like dentists or really like attorneys or really like CPAs. It all comes down to what type of coverage they want to be providing. So make sure you can't just go to any one carrier. You want to have an independent look at multiple carriers when you're considering coverage. Social Security or social insurance substitute, really what we're talking about there, is if you were to suffer a disability, what this can do if you have this on your contract, if you were to receive disability benefits from the federal government, then that would offset any coverage that you would have, any benefit that you would receive. That's important to take into consideration. Sometimes, clients have that put on there to lower costs, so it can be a good thing. You just have to understand that they can require you to make sure to determine if you're eligible for federal benefits, and if you are eligible for federal benefits, then they will reduce your overall benefit. Oftentimes we don't put that on contracts, but if we're looking at trying to make, from a cost standpoint, kind of weighing the pros and cons of it, it can be used. So it's not in and of itself a bad thing. It's just something to be aware of. If someone's presenting you something that's a lot less and they say, oh, well, they didn't put this on there, what does that really mean? Well, it means that your benefits can be offset if you were to receive any disability benefits from the federal government. Let's take a look at types of products and benefits. So what's really covered? What type of income is covered? What any insurance carrier in regards to disability insurance is trying to do is replace about 60 to 70% of your income. They don't want to replace 100% because you're not receiving 100%. You're paying taxes on some of that. So they're trying to hit a number that's closer to what you're netting. That's their goal. That's the maximum that they want to issue there in that regard. You can also see you can get up to, from an individual carrier, we'll talk about supplemental coverage from other carriers, but from an individual carrier, the caps you're going to be able to get is going to range from about $15,000 to $20,000. That means any one carrier, the max coverage that they're going to give is going to be $20,000. Now this is traditional coverage. We'll talk about traditional versus international, or domestic versus international in a little bit. So like your Lloyd's of London, we'll hit on that. But this is what kind of your basic traditional domestic carriers are going to do. Is going to be 15 to 20, and that supplemental that we'll talk about as well too is you can get upwards of $35,000 of benefit, but you have to use different carriers. Residual disability. This is a really important thing to take into consideration. What residual disability really is just partial disability. So if you were to suffer a partial disability, you have a bad knee, you have a bad shoulder, whatever it may be, you can still do the material and substantial duties of your occupation, but you can't do it full time, really, is what it comes down to. Then this is going to give you a partial benefit. So if you're able to work 50% of the time, you're going to get 50% of your benefit. And you have to have, there's some limits there. You can, you've got to be, it's got to be about a 20% amount. You got to be 80% of production from an income standpoint before that really kicks in. But it's an important rider because a lot of disabilities are just partial. They're not full disabilities, and some people try to save cost, or agents try to show low premiums by not including that, when the reality of it is a vast majority of disability claims are just residual or disabilities suffered. Future increase option, this is a really important one. Obviously, how much you're making today is not going to be what you or how much you're going to be making in the future. So you want to have the ability to increase your coverage in the future, and the ability to do it without having to go through medical underwriting. I think that's the most important thing. I think we can all appreciate that you're probably, generally, you are in better health 5 years ago or 10 years ago at any period of your life. So you don't want to be exposed to that again, to have to go through underwriting again. So that's an important rider to make sure that's on your policy as well, to make sure it keeps up with any future increases of not only income but your lifestyle as well too. Cost of living increases. This is generally referred to as COLA, or cost of living adjustments. So what happens here is if you were to suffer a disability and were to go on claim and be receiving benefits for an extended period of time, your benefit's going to increase with inflation. That can range from 3 to 5%. And obviously, the higher you raise that, the more your premium is going to go up, but you definitely want to have some cost of living rider on your contract to protect yourself against inflation if you were to become disabled. A lot of times clients come to us and they say, gosh, my disability insurance is only going to replace just my individual income. What about the retirement contributions that I'm getting from my employer or the retirement contributions that I'm doing? Because what we tell clients to think about a lot of times is you don't necessarily need to replace fully your income. You need to replace what your expenses are. So they may say, well, that number's this, but I'm saving all this other. What can I do to protect myself against that? And a lot of times a really good option and a less expensive option is to have a contract that protects or is what's called a retirement security. Sometimes they're called pension disability plans. The carriers call them different things, but really what it's doing there is it's making contributions into the equivalent. It's really going into an irrevocable trust, not into your 401k or an IRA. But they have the same tax treatment there in that regard. So it's going to be going in to that trust while you're disabled. So it's going to be putting, if you're max funding your 401k, it's going to be putting $50,000 away every year into that. So that actually is a really good strategy from a cost standpoint. Get individual coverage for what your needs are, your monthly expenses, and then to cover that insurance or to cover that retirement plan contribution or retirement security policy. You're able to do that. It's less expensive than individual coverage. So that's a really good option that clients aren't always aware of. Within those types of policies, what you really want to do is make sure that you can get one that's based upon your income, not what you were contributing prior to your disability. Some of those contracts say, well, we're only going to give you what you're contributing to your retirement plan, while others will say, no, we're going to give you whatever a percentage of your income, with a max there, obviously. You can also have coverage or a rider that helps protect you against long-term care expenses. This is often referred to as catastrophic disability. So if you were to lose the ability to perform 2 of your ADLs, then they're going to give you additional coverage. And what you're doing there, obviously, you're paying the coverage. When you add that rider to a contract, it's less expensive because the likelihood of that paying out is less from their standpoint. Another thing that we hear from clients a lot is I have group coverage, and that's very important. You don't want to ignore group coverage. Oftentimes it's free, so you want to make sure that it's there, and it's a good thing that you can utilize. I think what you really want to do is have a good understanding of your group coverage. So what's the benefit amount, and is there a cap? So a lot of times clients will say, oh, well, it covers 60% of my income, but there's a cap of $10,000. Sometimes we've seen as low as $5,000. So that's really what you want to take a look at, because clearly if you're making more than that amount, if you're making $300,000, $400,000, you're not getting 60%. You're actually only getting that $10,000 a month. Then oftentimes on top of that, the benefit's taxable, because when your company is paying for your group coverage, they're saying, well, we are definitely taking a deduction for it. For those disability premiums, so all of your benefits come out to you to be taxable. Sometimes your employer will give you the option to pay the taxes on that. That's always, again, same concept there. That's a good thing if you think that there's truly a chance of ever suffering a disability. And trust me, there is a chance always, but not everyone always believes that. What is the definition of disability on that group policy? Generally, they're less protective. You see any occupation a lot. Sometimes clients will say, oh, no, ours has own occupation, but it'll just be own occupation for 5 years. So for a 5-year period of time, you get that pure own coverage, but then it goes to any occupation. So you can be forced to go back to work. So it's not a 5-year benefit period. They can say that we have a benefit period to 65, but it's only occupation specific for 5 years. And really, does it have all the bells and whistles that you want? So does it have the residual? Does it have the cost of living? Does it have the retirement aspect, the catastrophic aspect? Those are the things that we really want to take into consideration. So in all, group coverage can be a piece, can cover a portion of it, generally is what we tell our clients. You can't ignore it. But is it really going to meet your entire need? And generally, the answer to that is no. Let's take a look at business owners and high earners and just some different types of coverage. First and foremost, if you own your own business and you are the sole owner, you have a few partners, however that may be, let's just say for this discussion, you're the sole owner. You want disability insurance, you've gotten quotes, and they're extremely expensive. Well, a lot of times what works well for clients, and they're not always aware of this, you can actually go and purchase coverage for other employees, and you're not getting as much as you would get for you. You're just getting a real low level, but what you're doing is you're getting what's called a multi-life discount. So it can be different by carrier, but you can be getting unisex rates, just a flat deduction amount, or a flat reduction in premium amount. It can be different things. But oftentimes that really, even adding coverage to, secretaries, nurses, whatever it may be at a lower level, you would think it would be more, but actually by adding in that discount, you're able to bring the overall cost down. So that's a really important aspect to take a look at. A lot of times if you're an employee of a big corporation, they sometimes have those discounts in place. You see it a lot for physicians at hospitals, so check and see if that is available to you. So that's something to consider. That's a really good strategy for getting costs down for a business owner. Business overhead expense coverage, what this really does is it allows, if you were to suffer a disability, it allows your business to keep the doors open. So really what they're trying to do is they're covering whatever your expenses are on a monthly basis, and that's the benefit would be paid directly to that. Now that can also be deductible. Sometimes clients ask us that question. You can deduct that because you're going to be paying business expenses, which will then thus be deductible as well too, even if they're taxable. Key man insurance. We'll talk a little bit about this on the next slide as well too, but if you're a business owner and you have one sales guy, one physician, or multiple sales guys, multiple physicians that produce at high levels for you, or very important, or key men or key women, you can actually get a policy that will cover them. So if they were to suffer a disability, the policy will pay the corporation in a lump sum. So that can be, obviously can be a good thing, allow you to, still get the same level of revenue inside the business or the practice. A buy-sell, you hear that a lot. Obviously, a lot of attorneys talk to their clients about having a buy-sell agreement in place for death, but disability insurance is often one that's ignored. We hear that a lot for clients. So if you were to suffer a disability or die, a lot of times disability would be just as crippling for a business owner or for a partner as death would be, and sometimes even worse, because then they're still there and they need to be bought out or they need to continue to get an income from it. It's just not as clear as definitive. You can have a buy-sell disability policy as well too, or a loan protection or a loan indemnity policy. We're seeing that a lot more. Banks are requiring that. It used to be that banks would say, well, we want you to have an insurance policy, a life insurance policy to protect us. Now they can come in and say, well, actually, if you have have a loan indemnity disability policy, we want to protect that, and that works a lot like a decreasing, kind of according to the amortization table. So it's not too terribly expensive, and definitely protects you and the bank in that scenario. So let's talk a little bit about different coverages. You can see, clients come to us a lot and say, I can only get $15,000 of coverage, and we already said that some carriers will issue more than that, and then you can use multiple carriers to get higher than that, which we'll talk about. But we hear that a lot. Obviously, there's domestic versus international, and again, domestic is just your local carriers. A lot of the big players in there can be MetLife, Principal, Guardian, Standard, Union Central. There's obviously other carriers that provide disability insurance. But those would be domestic carriers. International carriers, really all we're talking about there is Lloyd's of London. and that type of coverage is completely and totally different. There's generally, for the most part, there's no cap on how much you can get, but those contracts work in 5-year intervals. So they're non-cancelable contracts for 5 years, but after 5 years you have to go through underwriting again, and if you were to suffer a disability, you would only receive a 5-year benefit. It really comes down to if you're an extremely high income earner and you haven't proportionally saved that amount, that's when it can be a good idea for you to address that. Supplemental coverage, and what we're really talking about there, is taking 2 domestic carriers and putting them together. So let's say your income is $1 million and you're really wanting to try to get to the max amount of coverage that you can get. You really need to be at that $35,000 a month amount coverage. You can get there, obviously. It takes a little bit of strategy with carriers and who you use and that type of thing, but you can definitely do it on a domestic level where you're able to get the ideal contract that you want for a substantial amount of money. Again, so you're looking at upwards of $25,000 to $35,000 of total coverage that you can get from a domestic carrier. Lump sum, those can essentially, what they do in that scenario, they sometimes can be less expensive, but rather than paying a monthly benefit, they just pay a lump sum. And that would, you would really those make sense if you're looking for something just really specific. If you would just want to, hey, if I suffered a disability, I'd want to be able to pay the house off, pay all my debts off, and then just receive a lower amount of individual coverage. And then key man insurance, we talked about that in regards to putting it on employees of business owners or practice owners, but you can put key man insurance on yourself if you're the business owner. So you can have key man insurance on just you. So that's a way to get some additional coverage and to get a lump sum amount as well. So if you were to suffer a disability, that key man, your disability monthly benefit would pay, and then that key man insurance would kick in with a lump sum. And then, if it's a long-term disability, you have to close the doors and you do it, but you were able to take advantage of both types of coverage there in that regard. Well, thank you for taking the time today. Hopefully you found this beneficial and maybe a little bit educational. Hopefully you're familiar with OJM, but if not, we hit on some of these things throughout, but we are a multidisciplinary firm where we are looking at planning, obviously, at different disciplines in coordination with them in a comprehensive manner. We focus on asset protection, tax planning, retirement planning, financial planning, and investment planning. We have attorneys, CPAs, CFPs, MBAs, all types of professionals here in-house. And obviously on the investment side as well too, that is one of the areas of specialty that we do. We manage money for clients that choose to work with us. Next steps, we'd love for you to request a free copy of one of our books. You can see on there they're for doctors only. If you'd like a state-specific one, you can absolutely request that as well too. The Wealth Secret of the Affluent, which is more geared towards the non-physician business owner. You can also download a highlights version of the For Doctors Only. It's about 60 pages. Really covers kind of just the meat of everything in there. We'd also, in regards to disability insurance, schedule a complimentary consult. We would want to take, we would more than willing to do a review of your current coverage, what's available to you, what's the best strategy in that regard. But also, we offer a consult in regards to just your overall situation. So if you want to have a broad discussion about the different disciplines and what's important to you and what are some things that we can be doing to help, or what are some strategies that we use for our clients, we'd love to have that discussion with you as well too. You can subscribe to our newsletter. We would appreciate it. Or you can also contact me directly. You can see down there my email address. It's just michael@ojmgroup.com. There's the 800 number. Just call and ask for me if you have any questions on this today. But I appreciate everyone taking the time today, and hopefully we are able to speak soon.